Hey guys, I'm super excited to be back at Columbia speaking to you guys, obviously in a more virtual setting this time than the last time. So hope everyone's doing well. I think hopefully the light's end of the tunnel here a little bit. I think as I talked to a lot of my MBAs this semester already, I think there's obviously you guys have kind of been in it now at least for 6 months or longer. I think is a little bit about figuring out how to kind of use the situation that we have in front of us to still get the most value out of both the MBA and also the career search, which has obviously changed a lot. I think that provides a lot of opportunity in this space, and we'll kind of get to some of those topics as well. Today's discussion, the topics I wanted to cover were obviously this is a private equity and investing group, so we'll try to cover topics around sort of coming from different backgrounds and entering the industry. I'll give you a little background of myself, and also happy to open up any of our resources that we have on the broader Elevate platform that we've kind of built here over the last year. So I will just quickly start off with a little bit of my background. I spent the last 8 years in investing and finance. I started actually at Goldman post my MBA. So I graduated around the last financial crisis, a little bit after that. So a few years after the last financial crisis. In some ways similar to what people are going through now. So I'm happy to comment a little bit on some of my strategies coming out of that. I went to Chicago Booth for my MBA, and then I started at Goldman IBD. Advice I'd maybe give to folks now, we're seeing a lot of activity, obviously on the credit side and also on the growth equity side. So, I would just encourage people to we'll get into strategies here, but be a little bit more flexible as you look at opportunities, not just, traditional private equity. Anyway, my story, I started at GS, Goldman and our investment banking group. There I was kind of right place, right time. I got the opportunity actually to lead our some of the largest deals in the FIG space, which is where I joined. And I skipped the screens for a second. I'll just talk to you guys. And so I was a lead associate on the GE Capital transaction. So if anyone was familiar with these early in kind of the 2013, 2014 timeframe, we basically disposed all of GE Capital. And I think that was such a tremendous learning experience for me in terms of transaction experience, because I came from a consulting background pre-MBA, so I didn't really have that type of transactional experience. And it did like IPOs, split offs, and all these things. So we kind of ended up doing probably 3 or 4 of the largest deals ever in FIG. So for me, it was kind of right place, right time. Then I decided to transition to the buy side. I was able to get a spot at Goldman's PIA group, which is our own private equity fund within GS. Joined as a senior associate there, made vice president, I guess the first 6 months in, then sort of stayed on. So now I transitioned to PE. And for me, that transition was really, really challenging. I'll be honest with everyone here. We could talk about what makes that transition really challenging. And then kind of fast forward, and then joined another fund in 2018 to help build out their global private equity business. So that's sort of my professional background. To date, I think, kind of a bunch of people development, things like that I've always been involved in. I also founded this thing called Elevate last year, which is where kind of us and the CVS partnership comes up, which is over the last year, it's sort of become one of the larger platform for finance and investing careers. And we've kind of built it 100% by professionals themselves. And so kind of, I'll share with you guys some more resources on this, but for anyone sort of looking, because I really think in the investing area, to really hear from professionals, get access to them and sort of really break in is really, really challenging. And so that's how we've grown it over the last year. We've partnered up now with all the 30 top undergrad universities, all the top MBA schools, as well as with, so many professionals from all the top firms. So then the mission is basically to provide top quality career resources and also kind of networking and recruiting. We're building kind of a recruiting platform, which I'm sure some of you guys have already seen in terms of roles and stuff like that. So I kind of give you, this is kind of the growth of Elevate, which we're super proud of. These are this is more important. I think if you guys ever feel like you want to kind of hear from professionals on like what it is like to work at their firm, or kind of how you break in, how is recruiting, how is it, interviews and internships, all that stuff, I encourage you to check out the platform where we featured pretty much, a lot of the top professionals. And these are our partner schools. Again, I'll send out a link for you guys to get on the thing. And then we have the one thing that's been really popular with the MBAs has been the trainings, which we've done as sort of built completely by professionals. So before I jump into this, if there are folks, I know when I do these, folks have like ton of questions. So I can start off with one or two questions.
Hey, Kaushik, Jeff Laupola here. Sorry, I'm driving, so my camera's off. I saw your interview with Mark Cuban on your Elevate platform on YouTube. Just curious, who's some of the most interesting senior business leaders you've interviewed thus far?
I will say it's probably, I mean, Cuban's up there. And look, I think my goal in some of these interviews was to bring in people from my network who are like relatable to our candidates. So I candidly have not tried to feature like CEOs and whatever, because I feel like, yes, it's really not, yes, it's nice to hear what they say, but I feel like it's not as practical for students or young professionals to be like, all right, what does it actually take to succeed in the next 3 to 5 years of my life? So I'll give you that context, Jeff. But Mark, I told him about the platform. He was super excited about it. I had on Anthony Scaramucci, who another kind of, person who's very interesting. He started his career in Goldman. He started 2 hedge funds over his career. I think is, known more for being fired by Trump after 10 days of being in office. But I think, he's really built up sort of his own brand as it relates to not just in the hedge fund world, but also sort of, holding some of these conferences and things like that. Again, I think Mark Cuban's become a celebrity now. He's also kind of very modest background. I think one of my takeaways from kind of interviewing all these people, and I'll be honest with you, as I myself try to build out Elevate, it's just that you kind of don't see all the hard work that they've put in. I think Cuban for something like 7 years didn't take a vacation. So built in the .com era and he got popular. So anyway, my point is, I think the more interesting ones, guys, for you guys to check out are probably professionals who and partner level people from, we had on partners from Warburg and some of these private equity funds, if you're interested in PE, we've got on some from, on the banking side or other careers. We're going to have an MD on from Oak Tree in a couple of weeks if people want interest on special situations. I'd say kind of those people I feel like more relatable for me and also probably for you guys to sort of learn about more career success for the medium term. But good question, Jeff. I'm happy you sort of looked it up.
Hey, Kaushik, this is Julia speaking. I was curious what you think about in terms of trends. What are you seeing? Are you seeing firms move away from that headhunter model, or is that something that you're hoping to kind of help them do?
Yeah, it's a good question. So look, I'm not saying like, I think absolutely the way it kind of currently works is there's kind of different tiers, right? So if you kind of look at the largest funds and what they're looking for is one combination of sort of pedigree, right? Kind of what's been your background, what are the types of places and funds you've worked at, and then also sort of like, why are you uniquely positioned, from a background perspective to work here. So let's say you have an industry expertise or whatever. So for the vast majority of the middle market, they don't have a lot of resources to go out and sort of recruit even the upper middle market level. One is there's kind of a big fit question always, and there's so much turnover in this industry these days. Like, how do we kind of find better fit people is one question. The other question is like, how do we just not only go to 2 or 3 MBA schools and only go to like 3 or 4 undergrad schools for all the roles. So there's a little bit of like diversity out of, just the schools that we go, that we're only, going into. That's a resource question. And then there's more around kind of like with our network, we're able to sort of present the candidate story. I think that's the other thing. We always try to put this like square peg round hole into all these candidates and say, oh, if you haven't worked at X, Y, and Z, you're not going to be fit at this role. But it's a very backward looking thing. I'm more a fan of like, let's look forward at this candidate's potential, their interest, and their like level of, readiness for a particular job. So I think those are just some of the things, we can have an offline conversation, Julia, about this, because we spend a lot of time thinking about it. I've just struggled when we've hired for roles, and like it takes 6 months to hire anyone, and it's just not a great way to work.
Hey, Kaushik, this is Shama. What's your take on P recruiting for the operating teams?
Yeah. Okay. So what's your background? Can I ask you?
Yes, I'm an M&A consultant. So I've been working with PE firms on trying to create value within their portfolio companies.
Yeah. So I think your main competition is going to be, and sorry, you were an M&A consultant or like a strategy consultant?
No, I was an M&A consultant. So doing projects all across the deal cycle, right from diligence to signed at close planning and then value creation post that.
Okay, so look, I think you're a competitive candidate, right? So I think you're going to be competing against people from McKinsey, Bain, BCG, Deloitte, et cetera, of the world. I think you just have to prove to them, look, I've done X, Y, and Z deals. This is what kind of the value we've actually added, and then actually show them that you understand the PE landscape, which the consulting people may not be able to do, because they want these days. We're bringing in consultants or even internal consultants like at the diligence stage, right? So we're not really waiting for people to come post deal and then do this whole thing. Like I think we want to get a buy-in from value creation teams and consultants, early on, just because there's just so few value drivers these days that we got to make sure, you're like, on point when you try to drive value. So number one, like look at their types of portfolios and come in with tangible ideas on what you would do for such investments that they already have kind of on the book. Number two, I'd say, what have you done already as far as, end to end, whether it's M&A, but I think the post M&A stuff, I think the M&A thing is like, people talk a lot about the process of that, but I think that is kind of, if you're not looking at the investing side, it's less interesting to people. But I think the operational side, exactly, like a 30, 90, 100-day plan, what have you actually done? I think the other thing that's really, really important, this is the third thing, is most funds integrate you guys into the actual investment. So it's not just a 100-day plan. For the next 5 years, you're the ones who's kind of sitting on the board. You're interacting with their, CFO, CMO, ops people, sales people, marketing people. So the ability to understand, like, hey, I understand the drivers that are going into this company, and sort of what are the, that's where the consultants have a sort of a strong, value prop, because they say, hey, we've looked at these problems, fully and into multiple layers. So that's where maybe is one of your perceived weaknesses. You'd have to convince them that, look, I can actually understand a company at a deeper level than just a transactional level at the M&A side. So is that helpful, Shama?
Yeah, super helpful. And just a follow-up question, what are you seeing in terms of number of roles are?
Generally, that sort of is going to be a growth area, I think, going forward, just because, like I said, you're not going to drive as much. I'm talking more trends-wise, like the next 3 years, and even more specifically, because look, the leverage, has been played out over the last 8 years. The valuation has been played out a little bit over the last 8 years. So if you look ahead, what are they going to be the drivers of value creation? I think, it's going to come from operational improvements, and we're already seeing that as far as that. So as it relates to your specific funds, I think it's a little bit about fund specific, right? Some people they hired up, so they're very, kind of stacked at that level, and some people are sort of still looking. So it's sort of just, I think, a fund specific question. But I think, given your background, and also the industry point, if you have any specific industry expertise, I think that's the other area where I think you can sort of set yourself apart.
Thank you. That's super helpful, Kaushik.
Yeah, you got it. Okay. Why don't we maybe dive into a couple of slides, and then we can come back to any other questions. All right. So as the number one question I get from people when we do these kind of sessions is like, all right, what are firms looking for? And I understand everyone in this panel is coming from all different sorts of backgrounds. So we're going to try to keep it as tactical and strategic and helpful as possible, but also, as people have specific questions about it, anyone on the panel who already is coming from PE already knows this. But if I was looking at a candidate who, and having just worked on the Elevate side, on the recruiting side with a couple of different funds to sort of, build up the, for sort of a senior associate VP role, at the senior associate VP level, I think we look for, 5 or 6 things, and this is kind of comes up all the time. And the first thing I ask is, hey, I got asked is, hey, I don't have a PE background. And look, I think that is a disadvantage if people are looking to go into private equity, but it is not sort of a, end all be all. It doesn't have to be. I've seen plenty of candidates, and are able to do it kind of effectively. So kind of, well, how do they do it, right? So the answer is, one is we want to see execution ability, right? I think the challenge with the post MBA role is there isn't a plan, there isn't necessarily a training program, right? So you guys are going to be expected day one to be able to execute transactions from A to Z. So what do we want to see? We want to see either, which is why, we go for PE candidates, because they've done those sorts of deals. But if you can sort of prove that, hey, within banking or within consulting or within whatever, you've been able to take a transaction from, A to B and A to Z, then I think, and be able to manage that's really important. Another thing here is just the understanding of how PE processes work, right? How do round ones work? How do round twos work? What happens when diligence, like, what do we mean by diligence? What are you actually doing? How do you actually build this model? So things like that are going to be very important. I'm going to cover a lot of this in the training stuff. So I'll leave that aside for now. If people have questions, we can talk about it. So that's the first thing, execution ability. And there's a lot of different ways we kind of test on that. Number 2 is the analytical ability. I think here, again, it is helpful if you're coming from sort of a more analytical career, but it's, again, not an end all be all. Again, we want to see, a strong financial modeling. Again, at this level, it's a little bit about, you're going to be running the model for a deal. Again, financial modeling in PE is not that complicated. It's more conceptual, and it's all about sort of how you think about things. But it is something that we obviously want to see. one thing I'll add here, you guys in your search, and we can talk about sourcing and searching in a second and networking. My recommendation is to find places that obviously fit your background. So there's going to be firms that are going to be a little bit more at the associate level, more in the middle market, a little bit more sourcing heavy. So if you don't come from a super strong, PE background before, but have, existing relationships or, have some industry knowledge, my suggestion would be to kind of target some of those types of firms which value sourcing. There's some firms at the upper middle market, all they want is someone to go in and run transactions. So it's going to be hard for you guys if you don't have prior transaction experience to kind of execute at that level. So it's a little bit about finding the right fit, which we'll get to. Investors mindset. Again, I feel like I talk about this in every single school that I go to, but what I do in these interviews is like, we just pick any deal or any project that you worked on, and we spend 30 to 40 minutes just really going into like, would you do that deal as an investor? Why or why not? So I think that the combination there of both the banking and sort of the consulting skills becomes really important. Again, you don't have to have those backgrounds, but the ability to understand something from an investor's perspective and kind of if you would invest in it and like what price and what did the deal get done, and really an understanding of that, really, really helpful. And obviously personality fit. At this level, guys, like it's so much about, it takes a while, especially in COVID, but even post-COVID or pre-COVID, it would take 3 to 4 or 5 months to even get an internship because, firms are just notoriously slow in sort of doing that, but also they want to sort of measure the right fit candidate and they want to bring the right fit in, and there's a lot of demand for this and stuff like that. So again, it's important to kind of exhibit that fit and find that right fit for you, and be open to sort of a little bit of a lengthier process. Is kind of what I'd say on the PE side. What's not on this page is sort of a few other things. Namely, what I recommend all of our students should do, you should start building your own sort of book of ideas and sort of book of opportunities. I didn't do this, but I feel like I should have, and I would have probably been more successful in recruiting even earlier on, is that whatever industries you guys are focused on, whatever topics or areas that you're focused on, I would challenge you to sort of build your own like packet of ideas, go in with, hey, these are the 3 or 4 trends that I'm seeing. Let's say it's healthcare, telehealth or e-health or whatever. And these are the 3 or 4 companies that I've been tracking or kind of where they are. And automatically, even in a networking call, that like accelerates it from A to B. You just go straight away from being just a hello introduction call to now, hey, I have actual ideas that I've been looking at. And I think really accelerates sort of some of those networking discussions. So
I was wondering, what do you think about people from with international experience that don't have a visa?
Yeah.
If you see private equities hiring this type of people?
It's a good question, Gonzalo. I'd say about 30% of our students across top 7 MBA schools that I work with are kind of from the international background without sort of that visa thing, right? So I think the last year and a half or 2 years have been more challenging just because there's just been so much uncertainty in terms of like, what would happen in the future. There's going to be a segment of the middle market that just is not going to be institutionally set up to handle these types of visa things, right? So whether it's the OPT, even if it's the OPT, or even if it's sort of going back and sort of making those reporting things, to the government, they're just not going to be set up for that, nor are they going to have the people and the resources to do that. So I would say about 50%, unfortunately, of the market is probably less open to that. But that said, I think where the opportunity opens up is, again, it goes back to like, look, if it's a non-starter, then you just don't waste your time there. But I think there's still a healthy portion, like 50+% of the market, that is looking for sort of that right fit candidate. And frankly, in any of your guys' position, if you come from either a prior PE background internationally, great. If you come from, prior consulting, I think those people have been successful, or banking or whatever. Banking internationally has been a little bit trickier, and I'll ask you about your background in a second. But I think it's just about proving to the company like why whatever you've done in the past is going to be the best fit for them. And the only way to do that is to take your experience and then merge it in that portfolio. Like I wish I had that's the easiest, that's like the secret sauce in all this, is just like taking what you've done in the past and how can you add value to their portfolio. That could be relationships that you have, that could be, connections that you can make. It could be sort of, deals you have in the pipeline. Again, you're not going to have deals in the pipeline or whatever per se, but you could say, these are the companies I'm looking at. So you can overcome that by showing kind of some of these other things. But I would also say kind of going in eyes wide open, like 30 to 40, maybe % of these companies are just not not set up at the middle market level to sponsor people for the medium term. And that's just kind of from my background. But I mean, the flip side of that is 60 to 70% of the firms are, right? So you can kind of do that. And so then you kind of fall back into the same group of candidates as everyone else, trying to prove why, you'd be a good fit for that fund. Does that make sense?
A follow-up question. We have a visa that is with a STEM MBA that we have 3 years of OPT. Do you think that some firms, if you explain them that you have 3 years, can change their minds, or?
Yeah, look, I think it's sometimes it's just a binary question, in the sense that, like, some of the firms that I've talked to on the recruiting side, like, there's, in addition to the OPT visa, there's sort of like something they have to like disclose to the government, and like there has to be like regular like check-ins and all this stuff that they're just not equipped for. So I would say perhaps yes, and I know what you're talking about. A lot of our students with the STEM visa can have that 3. I think that definitely helps. So maybe that reduces the number. Yes, that definitely helps, because you have 3 years to kind of figure it out. We've had candidates in some of these other roles that I've done with Elevate on the recruiting side, where we've had internationals and no problem. A lot of, more of the first-time funds, more of the maybe the the lower middle market, ones that don't have as, that are not as big, are going to be a little more challenging for that. So it's just about, focusing your efforts on the ones that do. Look, there's like 1,000 funds, and there's, I also look, there's some like, someone was telling me there's like a good amount of firms, like $1 billion plus, that have just raised in the last kind of 12 to 24 months. So, if you guys can get on Preqin or whatever and start drilling that down and really like targeting fund by fund, it's just a numbers game at that point. Like, how do you take your background and then align it to this particular firm? And then who do you know that could maybe make that connection? I think that's the end of the day. Because I mean, look, you guys go to a great school, and then also how you can prepare for that. But that you can do on your own. Like, you can go on any of the stuff that we have and get up to speed really quickly, right? So I think maybe that's how I kind of approach it. There's still a good amount of firms. There's some going to be pre-select out. Again, nothing you could do about that, but there's still a great amount of firms that'll do that. The STEM thing is definitely a plus, but some people, again, it's just are hesitant a little bit because they're not set up to do the all the paperwork. Does that make sense, Gonzalo?
Perfect, thanks. Okay,
cool. Yeah, you got it. What else? Yeah, Athena, I see you raise your hand.
Yeah, hi. Thanks for being here with us. So I have PE experience before, but I've never done banking, and it's kind of an annoying question whenever this comes up, because people, have a very cut out profile for the candidates they're looking for.
Can we do a little bit of can you give me a little bit more background?
Yeah, so I worked in, so I graduated college, became a reporter, and pivoted straight into growth equity, and never did banking in between. And now when I go to funds and, talk about my deal experience, all of that, and it's all great. And sometimes they say, it usually comes up in 2 ways. One, like, headhunters hate profiles like mine because it's not the cookie cutter profile that's easiest to sell. And 2, when I talk to the funds I'm interested in, they usually have some layer of doubt, but they can't quite quantify it. So usually they'll say, like, if you do well in the model test, it's whatever, but I still feel like there's a layer of risk that they sense from me not having done banking. So I guess my question is, how would you position or tell the story of someone like me, and kind of leverage my advantages of having done, real buy-side job over being at a bank for the same number of years? Thank you.
Yeah, of course. A couple follow-up questions to that. How long were you in the growth equity role?
I was there for 3 years.
3 years. And then did you was it deal work? Like, can you point to like deals like that you executed on, you built models on, et cetera? And what level of like stage and market was this?
Yeah, so we looked at companies between 100 million USD to 400 million USD in enterprise value. And yeah, we're growth stage investors, so typically high growth companies.
Okay.
I worked as a typical deal professional, sourcing, research, due diligence, execution, presentation.
And last question, when you say you're targeting, like, are you looking to kind of now take that and go into like more traditional, like LBO type PE shops? Is that kind of what is that the conversations you're having where people are struggling with the background?
I think both. I think with middle market firms, there's just more flexibility because of, you know, the structure of the fund. But when you say growth equity firms, they also want people who have had some kind of structured experience.
Yeah. No, look, and by the way, was this US based or international, the fund you were at?
It's a US fund.
Okay, so look, I'll give you sort of my brief answer. Athena, you can ping me afterwards and we can maybe, you know, I can give you more thoughts on this. Look, a couple of things you could do this. One is, you're right, like you have to sort of eyes wide open say, look, I obviously like don't have this background, but I think what people are getting stuck with, there's just some messaging going on, because the way you're describing it to me, it sounds like you did like what a banking or whatever would do plus. So I think maybe a little bit of the messaging is getting lost in describing to them what you actually did and the more on the deal stuff. So if you could get people comfortable, like from what you're telling me, traditional deal professional, 100 to 400 million growth equity buyout shop in the US, like that to me, like, and again, I'll ask you some follow-up questions. This is an interview, but I would then ask, all right, maybe talk me through a few of the deals that you did. What did you actually do on these deals? You know, how does your role evolve from year 1 to year 3? You know, what types of industry stuff are you focused at? What do you think of this industry? So these are like 3 or 4 questions I'd ask right away to get an understanding of kind of how much of this work were you actually doing and how much was sourcing versus actual like deal work and all that stuff. And I'll say, how many deals did you get done? How many did you lead? How many models? Like all that stuff we could figure out. So I think, to be honest, I think the part of it is, yes, the headhunters may have like this preconceived notion that you need X plus Y and then you go into Z, right? I think that's one thing that you and I are not going to be able to solve that today. You know, it is what your background is. But my point to you, I think what you can resolve or you can make better probably is your story, right? It kind of describing these deals in a way or describing your background in a way that kind of says, hey, this is a deal background. I've literally been a deal investment professional. Like, I don't know what you want to say. Like, you know, I've done all these things. This is what I've done. So I think my like quick diagnosis is a little bit about maybe how, and I want to be very helpful to everyone here. So I'll be very direct and frank. I think it's a little bit about the way you're presenting it, because the way you present it to me just now, I'll ask you like 5 or 6 follow-up questions, but it should be okay. And the other thing is also targeting, right? Look, there are going to be funds like are going to look for, you know, a little bit more of that, you know, more rigidity in the background, and they're going to look for that. Not to say that you're not going to be competitive in that, you're just going to have to go in eyes wide open that's one of the things you'll have to overcome. How do you overcome that? I think you go in really strong on your technicals and your deals. Say, hey, these are 4 deals I want to talk about. I've done this deal, this is what we did it at, this is what the company was, this is what the multiples were, this is the revenue projections. Like, know all your numbers really, really cold for those like 3 or 4 deals that you want to talk about. Number 2, industry, right? Whatever industry you want to focus on, whatever industry you did, however it relates to this particular company, you guys sort of say, hey, we looked at this, you know, I'm giving an example, media operator in the Midwest. These are all the other companies we looked at. This is the metrics we like, this is the trends we like, et cetera. So you got to have to actually like bring in some of the deal work, the IC work, the ICs that you put together, all that information sort of kind of in this conversation so you can kind of convince people that you can sort of do the job. And then lastly, I would focus on sort of your growth from year 1 to year 3. I think that's why I asked you that question. Like, you know, when you're in a typical PE role, you start out doing something much different from when you end up leaving, right? So I think we want to kind of talk about, look, I evolved from being sort of a model person to now running transactions, running deals. I know how to do that kind of stuff. That's the other thing why people want that traditional background. Look, on the banking side, I think you can, just by talking about your deals, you can overcome that. So that's just my quick off the cuff 3-minute like diagnosis maybe or whatever of what you just said. Athena, I don't know if that resonates with anything based on your experiences.
Yeah, that's really helpful. And I don't want to take up like more of everybody else's time, but I think this question might be relevant to a lot of people here. On the PE side, when you talk about like the debt financing part of the job, like the financial engineering side, is that something that you actually do as a banker, or as a banker, do you just kind of take the deal structure as your client has already worked it through?
Yeah, so I'll give you kind of a general answer to this question. So actually, I figured it out. I think where you're struggling with is the capital structure side. So people are asking you like, all right, how much do you lever this company up? Sounds like you're getting stuck in which makes sense because that's not your background. So I think I would say to your first question, banking. Look, like this is why like people say, hey, have you done banking or have you done consulting? They're not, like, not all these experiences are created the same. You could be in banking for 2 years and never have done a buy side deal. So you would have never seen, you may have just done IPOs or you may have just done sell side. So again, the devil's in the details here a little bit. So yes, if you're on a buy side thing, sure, maybe you do kind of a, whatever deal, but at the analyst level, you're not really like running, you're not really like doing a lot of the deal work. You're just kind of running numbers in a model. So it sounds like you actually need some like LBO work and stuff like that. So my point is, if that's what you that's the kind of path you're going down. So yes and no. I don't think it's a necessity. I think though the bankers probably do get exposure to, buy side type transactions where they're building those models, setting up those types of capital structures, et cetera. So yes, I mean, on the margin, definitely. But if someone started out in growth equity or even in consulting, they would have never seen it, that stuff anyway.
Thank you so much.
Yeah, you got it. You're welcome. No worries. All right, Ryan, what's up?
Hey, yeah. Just as a follow-up to some of the questions earlier, like you said, go on and look at some of the funds that are in the market and fundraising there. Since the pandemic has really slowed down, this was one of the first years where we see all that drop in fund close and fundraising. Are you like seeing that timeline kind of push out from 3 to 5 months into a longer period? And then also a follow on for the last one, just more general, for maybe those people that don't have a direct deal exposure background, how just trying to get into the door do you show that you have the technical knowledge behind it before you even get into that like initial phase?
Yeah, and so this is a loaded question. So let me ask the second one and the first one. So the second point around how do you kind of show this? Different funds have different ways of testing it, but they all test it, right? So like every fund is going to have a different way of measuring that. And I think usually ends up being some sort of a case study. The ones that are more middle market, heavy PE type funds will give you like a full-fledged, memorandum. They're going to say, build a model around that. You have 5 hours, 6 hours to do that. So however you decide to prep for it is your thing, but that is a demonstration of like how you can kind of do that in a short period of time, right? So that's sort of one thing. But even before it gets to that point, they're going to test that in different ways because they're not going to give a modeling test to everyone, right? So they're going to, let's say in round one, they talk to a bunch of people. They want to try to get a sense of like, what is your investing methodology or whatever. And look, if it was me and what I tell our kind of recruiting clients or whatever on the firm side who want to recruit from us, is like, there's 3 or 4 buckets I want you guys to fill. So as a candidate, let's start with that. You should kind of figure out that like different funds are different. So if there's a fund that's more of like a first time fund, even in PE, your role there is going to be partly deal related, but it's also going to be partly entrepreneurial. Like you're going to have to help them, set up shop, fundraise and all that stuff. So that's kind of the earliest stage of sort of the PE side. To kind of more of an established fund, maybe they're like fund 2, fund 3, where there's a little bit more entrepreneurial thing there where you're going out, sourcing more, kind of building that deal flow, et cetera, to a fund, maybe that's 5, 7, 8, 9 funds in where like, the sourcing operation is fully in focus, all the banks are calling on them, et cetera, and maybe there's much more deal related. So I would say kind of the first is kind of that stage of where the fund is at and kind of, balance your experience with that. On that point, also, I think a lot of people who don't have a lot of deal experience are more successful in that first chunk of funds I said. So more of the earlier stage funds, less than 2 or 3 funds raised such that they can sort of get in and get a good deal experience. And they also value your prior, whether it's more entrepreneurial, whether it's more operational, whether more strategic, more consulting, whatever it is, on that fund. The second level of kind of thing that I would look at is this fund and look at their backgrounds, right? Is this kind of a lot of ex-consultants? Like there's so many funds out there and you could just go on their team page and you'll know. Some of them are like heavy, special situations and like, fixed income trading and this and that structuring and all this stuff. And that for someone who doesn't have that background is not a good fit. But there's a ton of funds out there that were like, ex-consultants. Again, targeting those types of funds probably that have more kind of backgrounds like yourself and kind of more encompassing, it's probably going to be helpful. The last thing is kind of on proving yourself. I would still, though, the first couple rounds, depending on I've just kind of said the stage and also sort of like the prior role, the background, the color that I've given you there, I would still say you're going to be asked to take deals or anything that you worked on, companies, transactions, and put an investor lens to it. Like you're going to have to say, look, yes, you advised. And what's your particular background, Ryan, if you don't mind sharing?
Yeah, so I worked at Bloomberg and I helped build out the private equity program that they have to analyze the market there.
What specific, like what is this, what part of it?
It's like Bloomberg's version of Preqin. So meeting with GPs, LPs.
Okay, cool. So I got you. So, okay. So like you have actually a good understanding of like fund structures and kind of how funds operate. Where your weakness is going to be, frankly, like the transaction side, like, how do you get a deal from a buy side get done from A to B, that thing I talked about earlier, and then the actual like technicals of the actual, how do you build this, build the financial models and kind of run diligence, etc. The first point, I think you gotta point a little bit to any kind of project management type stuff that you've done before. In your case, and are you first or second year?
First year.
First year. So for you, you may not hurt actually to try to get something in a little bit more deal related thing, either over the school year or over the summer, or even in the spring, to just kind of start bridging that gap. Because I think it might be you're gonna have to convince people on like 3 or 4 different big things. So, but if you can already say, hey, I worked in PE for 6 months, or I sort of done X, Y, and Z for this time, that may be able to help you bridge the gap. But everyone, kind of everyone's different. The thing that might help you is actually having built this thing as a program. You may actually be able to target some of the more earlier stage firms and say, hey, I know you guys just raised funding, or you're looking to raise funding. Like, we help build this program here. I can sort of do that. But again, you're gonna have to convince some of your deal stuff. So I just say, knowing that as a weakness or whatever of you going in, I would just try to, go about it that way. Again, I think you may also benefit from like something in a more transactional, either M&A or M&A execution or consulting, something like that for a summer or so before you can make that case a little bit stronger. Again, that's without knowing a ton about your background. Yeah, you got it. All right, Talis. Sorry, I hope I got that right.
Yeah, hello, I'm Talis. Yeah. Thank you. So, quick question here. I'm Brazilian, so should I focus in private equity funds that have investments in Latin America, or it doesn't make difference? Yeah, should I target funds that have investments in Latin America?
And how long did you work in Brazil, and what did you do there?
Yeah, I did a bit of both. So I worked for 3 years in investment banking, and then I joined Bain in the private equity group. Then I went back to investment banking. So the last job was investment banking.
Okay, interesting. And I think people are gonna ask you sort of why you kind of went from one to the other, right? I think that's one thing that you should kind of talk about. Which is, I think, just something you could talk about, obviously. I think the second thing is when you were at sort of banking / PE, if you've done any sort of specific sectors or segments or markets and things like that, those are going to be really heavy into play. I think if you can come across as some sort of a pseudo expert on one, understanding kind of the intricacies of valuation and how deals get done in that space. If you guys can come in and sort of, talk about, hey, I have existing relationships. I know how deals get done there. I know sort of how valuations work. I know kind of X, Y, and Z. That's a huge positive point that a lot of firms have, right? I think so. That's again, I'm helping you position your story. The second thing is going to be around trends and understanding the market. So one is understanding the deal side. I don't want you guys to mistake these two things. One is so much of the PE job, guys, once you get to sort of the principal level, it has very little to do with how well you can build modeling. And unfortunately, you have to get there post the associate level. Once you get to the principal level, it's so much about you being able to get deals done, right? Whether it's relationship building with bankers, whether it's relationship building with management teams, because at the end of the day, these deals fall apart on the smallest things, and an advantage is gained on the smallest things. So informational advantage, who else is in the process? What are other deals getting done? What are potential deals that could come in the pipeline? What are bankers are talking to who? All these things are so important at the end of the day, the finish line. The deals get done on this side by relationships, by what information you have, right? So my point to you is sell that advantage that you presumably have, right? So you have the ability to know how deals get done there. You've seen X, Y, and Z things you've worked on. You have existing relationships. And then now I build your informational skill set about, hey, this is the space I like in Latin America or Brazil or whatever. These are the companies that are there. I know that these are trends I'm seeing. So now, because you don't have prior investing experience, I always try to focus on when I talk to candidates, like, what are their perceived weaknesses? Because everything else we could spend hours on. I could talk to you hours about banking, and I know you'll get it because you've done into banking twice. But I want to focus on when I evaluate as a candidate, like, where do you stand in perceived weakness areas? And that's where I'll get comfortable with. So for you, it's going to be around, can you think like an investor? Like, what are your ideas that you have? Why do you think these companies are interesting? And does that fit with how we make our investments? So you could say, I'll be the Latin America, guy or girl, but if that doesn't fit in their value or growth or whatever philosophy, like, it's not going to fit, right? So I think having to that sense of understanding the thing. And then number two is like, yeah, like I said, networks, relationships, understanding of the market, et cetera. I think that actually, if you do it well, that could really set you apart in this whole thing. Your main competition is going to be the 30% of internationals that I talked to you about at all my other schools, who half of them have done maybe LATAM investing or whatever. Again, having done banking, like, again, play to your strengths, right? I think you can say, hey, I've done a ton of deals here. Yeah, I could do a deal in my sleep. So like, I can do this. Here's how the things that you think I can't do, this is how I'm going to do, and then go from there. And then really investigate and like focus your efforts on like tangible, actionable opportunities. Like everyone has like LATAM funds, but some of them are like, oh, we're not going to recruit, or we're not going to, you know, hire externally, or we're going to fall, whatever. So I just say like time is of the essence. So don't really, you know, waste time on some of those funds who may or may not do it. But I think you already have an idea of the deals you worked on from Latin America, of who's raising capital, who's not. I'd start with them and start having those discussions. Is that helpful, Taos?
Yeah, thank you.
Okay, there was a question in here on, can you talk about industry-specific PE, work in real estate development firm, and interesting finding this specific? Yeah, look, I think the biggest misconception that folks have, or candidates have in general, is like, oh, PE is like, especially people who are kind of coming in from maybe not the private equity background, is like, oh, PE is all the same. And that's not true. As you all know, or many of you guys know, it's just depends on the fund, depends on what they're doing, depends on the role, et cetera. So just because, even if someone says, hey, I've done prior PE, we're going to be like, all right, what did you actually do? You know, was this sourcing? Was it deal? You know, what did you actually do? So yeah, I think the question around industry specific, absolutely use you know, industry to your advantage. I think things like, you know, real estate, financial services, natural resources, healthcare, those industries tend to just favor people who spend a little bit of time in them and actually can speak the language and understand these companies and don't have to kind of start over. So anywhere you can have that added benefit, absolutely, you guys should try to do that. I think real estate also is, there's a lot of distress going on in real estate right now, and for a lot of different things. So you can sort of put on that hat. I think you'll just be in a much different position. Maybe I'll end with this. I put this slide together a while back, maybe last year, because I was getting a lot of these questions, and I think I wanted to try to help where I can. The first area is, all right, the brutally honest about, you know, what is the most viable path for you, and you're not going to know that until you start kind of laying the land. I think when you enter business school, especially for the first years, there's this kind of green grass, you know, shine in your eye, like anything's open to you. But the real, you know, the real answer is not every door is going to be open to everyone. It's a little bit about how you open those doors. So I think one is understanding kind of brutally where you are. What is it going to take you to get there? And then understanding that, hey, like I want to spend time on the most efficient things that I can actually, like, you know, advance the ball on. And the second thing is like, where are the biggest opportunities in the market? Like I said, this is an area that I didn't do when I was in business school that I wish I had. Had I been a little bit more open to distressed and credit coming out of the last credit, crisis, I would have, you know, gone straight away into investing. And not that I have any regrets about where I ended up. I think it's just something to think about. You know, often gravitate yourself to the areas where there is a lot of need, and you will find that you will learn a lot more than just kind of the same stuff over and over again. Another big thing our MBAs struggle with is just telling their stories. I think I try to do this with people on this call, but there's a little bit of self-promotion involved, right? I think yes, you got to be modest, but I think you got to align your story and experiences towards the actual opportunities. And this is where the fit part comes in. A lot of people struggle with. They just kind of send out the same spiel to everyone. And actually, if you just spend another 20 minutes, 15 minutes just going through the company's portfolio and understanding like what do they actually do and how you can actually benefit, and that might actually lead to much greater results as it relates to the next point. Networking, again, be very surgical in your approach. Again, the reason why we've been able to build out such an amazing network on the Elevate side is because I've been very surgical about my networking over my career. So I just say that is one thing that tends to really help you out through the course of your career. And again, this isn't something that you necessarily need to do this summer. You know, I need to get the best job I can. Yes, you do, but it doesn't have to end there, right? Your career is long. So you'll have to come back to this question over and over again. Like, what is it that you want to do? Foot in the door, like I said, obviously with COVID now, it doesn't limit you to New York. You know, I think years past, Columbia students would just kind of find something in New York. I think you guys now can look at funds in, you know, Austin, or funds in San Francisco, or funds in Seattle, and really now prove why you can do that, right? So I think that's one huge advantage. And look, if it means take a school and an internship on, I think with the lack of on-campus stuff, this is something totally doable. And then realistically have a plan A, plan B, plan C, right? So much of this is optionality. So like figure out what you're missing out on to kind of chase what you're kind of looking out for. Do 2 summer internships if you can. One in something like traditional, one in something that's more risky. and sort of lay that out. So that's maybe a few just general advice I wanted to sort of end this conversation with, and really wish you guys best of luck. It's the COVID has not been kind. I think you'll get a lot of answers from people on, hey, we're not fundraising now, or fundraising has been delayed. Someone asked about this earlier. And I think that's partly true, but it's also partly a way for firms to just be like, oh, I'm not ready to talk about this yet. But, if you've identified these as firms, like go back to them in a couple months and say, hey, we talked, you said this, what is it looking? A lot of times that persistence, the third, the fourth, the fifth, the sixth conversation is actually when you get internships, not the first one. So maybe I'll leave you with that as well. Okay, I'll turn it back to Andrew.
This has all been incredibly helpful. So thanks for your time, Kaushik. So thanks everyone for dialing in, and thank you.
Yeah.